Hello everyone, hope you're all keeping well and have settled into some sort of routine with the new normal. I'm Jeff Ando, Content and Production Director at GTR, and I'm delighted to welcome you to this hour-long webinar organised between GTR and Arabia Monitor, assessing the impact of COVID-19 and low oil prices on the MENA region, which as you may know is a market dear to us here at GTR. As coronavirus has continued to spread worldwide, the MENA region has been impacted in many ways, from economic disruption to falling oil prices and a sharp decline in global growth. These developments have placed immense strain on both oil and non-oil revenues across a range of sectors, including real estate, tourism, and most significantly, trade. Over the next hour, we will seek to uncover how the region is navigating this turbulent time and the key issues impacting trade policy making, from the long-term consequences of an energy crisis to the impact of lockdowns and travel restrictions on a dynamic trade hub. A lot to unwrap. Fortunately, for the purposes of this webinar, we can call on the expertise of Dr. Florence Eade-Oakden, CEO and Chief Economist of Arabia Monitor, who will address a number of these key issues before answering various questions posed by myself and also you, our audience. Florence, welcome. Perhaps you kick us off with your overview of the current situation, as I believe you also have some slides to share with us.
Good morning, everyone. Thank you so much for joining our webinar today, and thanks to our host from GTR for organizing this with us. It's a tricky time, isn't it? And it is for all regions of the world. The MENA region in particular is vulnerable because of the dual impact of the collapse in oil prices and the weakening of trade. It's a major trade thoroughfare, be it Jebel Ali in Dubai or the Suez Canal. And in addition to that, the weakening of tourism, or the initial complete collapse of tourism in this part of the world. We have major economies in the region that rely in a significant way on tourism, starting with Dubai, but also Egypt, obviously, and Tunisia, Morocco, and the newer tourism-focused economies such as Saudi Arabia, which had put together major plans focused on attracting tourism into their economies. And so it's a tricky time.
We do have some questions, so I think it would be great to bring those in now. Previous commodity price crashes have seen a pivot to diversification and those increased trade flows in particular, our first questioner asks. But those flows have also been seriously reduced by the pandemic. So I suppose, is this that perfect storm where you have not only those falling oil prices, but fewer options when it comes to diversification, and what could those long-term consequences be of that?
Yeah, it is very much of a perfect storm, and you know, that's what I meant when I referred to the double whammy of the oil price crash plus the pandemic. And so what this implies is that a lot of countries will have to think very, very seriously about the implementation of their various visions. Some of this will have to be revised, and some of this will have to be phased very differently. I'll show you in a moment a foreign direct investment picture, but this is a region that really has been mostly an oil exporter and a capital exporter as well. And now it's a region that requires quite a lot of foreign direct investment in order to implement what it's looking to implement. And so the trick today is how to prioritize so that the foreign direct investment does come in, and where it's going to come from. The big question is, where is the foreign direct investment going to come from? So we are now entering a world in the MENA region where multilateral assistance and funding is going to become important even for the traditional capital exporters. So for example, countries like Bahrain, countries like Oman, countries like even Saudi Arabia, these did not used to be IMF and World Bank type clients other than for technical assistance. And now this will change. These will be countries that will start to draw on help from the multilateral organizations. And this will bring in a whole new set of players, such as the Asia Infrastructure Investment Bank on the multilateral side, the Asian Development Bank on the multilateral side, but also private sector and governmental type investors, such as the various Asian and notably Chinese investment bodies.
How significant is the postponement of Expo 2020 after so much build-up, and what are the practical implications in terms of lost revenue and even some issues around insurance? And I guess a second part of this, a follow-up, had a question here, which is, was like to see other countries rethink their ambitious infrastructure programs, specifically Saudi Arabia, and the likelihood around delays to Vision 2030?
The first part of the question regarding Expo 2020. First of all, I want to say that this is not the first time that a major event like this, and specifically the Expo, has been postponed. This has happened before. It happened a long time ago when the Expo was being held in St. Louis, and it was postponed by a year at the time because they couldn't make the deadlines of producing all the infrastructure that was necessary for that Expo. They simply hadn't finished building the buildings. And the postponement of that Expo was good news for the city because it resulted in even higher participation than had been anticipated in the previous year. So that was a good thing for that city. Now, with respect to the Expo in Dubai, there are obviously always costs to postponement. So the cost question is always there. Whenever you postpone something, there are costs. The question is, what's the cost-benefit analysis? And do the costs get recovered the next year? And more is the hope. And what we can say with respect to the Expo of Dubai is that it's better to cancel and postpone than to have a bad Expo, that's for sure. It's better to aim for a good Expo and hope for the best, that is certain. What we can also say is that it's very difficult to see where the world will be 1 year and a few months from now, so a year and a half from the cancellation date. It's very difficult for anyone to tell you where the world will be a year and a half from the cancellation date. It's all a function of whether there's a vaccine developed, whether there are cures that work at least partially well for coronavirus, that allow people to continue traveling. But what is certain is that because so much was hinging on the Expo in Dubai, because the Expo was such an important component of the growth story of Dubai this year and for a couple of years back, meaning all the infrastructure supply, and for a couple of years forward, meaning what they expected to get out of the Expo. That obviously leaves a big hole in terms of the GDP of Dubai this year. And again, it's hard to say whether that big hole will be recovered and perhaps more than recovered next year, or whether we'll find ourselves in an equally pitiful global year next year, and the Expo, like everything else, will need to be postponed another year. If that's the case, then I can see that the impact on Dubai can be quite tough. So I hope that answers the two questions. I can come back to Saudi Arabia if people would like me to, but in a word, you must have heard the pronouncements of the Minister of Finance over the past couple of weeks. They are reprioritizing projects, they're delaying some, and as I said, the trickiest bit is going to be how to attract the foreign direct investment into these projects. Now that Saudi Arabia has drawn down reserves the way it has done in order to enact a larger budget, now that the fiscal deficit will be higher, and as we've seen, they've continued their international investment program because they found really good opportunities. It's hard to argue with that. There have been some really good opportunities on international markets. However, making all these ends meet is going to be quite tricky, all while keeping up the pace on the implementation of the vision.
Thank you, Florence. We've got a few questions coming in, a really good range of questions, actually. And the first couple do concern China. So you mentioned trade volumes increasing with China despite lower oil prices. Someone's asking, what are those volumes, where are those volumes coming from in terms of industries and sectors?
So trade between China and the MENA region, let's not kid ourselves, is still by and large an oil trade. So in terms of what China exports a lot of things into the MENA region, but what it buys from the MENA region is still by and large oil and gas. And so that's the story. The story is that China is importing from the MENA region ever higher volumes of oil and gas, even though the prices are lower. And that's why the dollar amounts are rising.
Second question around China concerns, what are the main opportunities for European banks to partner with the main Chinese banks to fund BRI projects? Reference to certain partnerships emerging between European EPC contractors and Chinese banks, but there is that general perception that the engagement is quite low and few and far between.
Yes, the engagement is so far quite low, but the engagement is inevitable. So it's inevitable for both sides. It's inevitable for the Chinese because the Chinese want to invest more in the MENA region, but it's not a terrain they know very well yet. It's not a part of the world they know necessarily how to access comfortably. European banks know the MENA region quite well and have a lot of experience in that region. But it's not clear to me that they necessarily have the risk appetite or the balance sheet, or both in some instances, to go in and finance what the Chinese are willing to finance, partly because, let's face it, the large Chinese banks and investors, they're state-owned. There's a different risk appetite there. And therefore, I think that these sorts of partnerships are an inevitability. We're seeing them already. For example, if you look at Egypt, many of the investments that the International Finance Corporation has made in Egypt, Chinese entities of various sorts have co-invested in those, partly because they're comfortable with the due diligence done by the IFC, and partly because they have capital they'd like to deploy into a market like Egypt, and that capital happens to be welcome and useful at this stage in Egypt. And so, in my view, these sorts of partnerships are inevitable. Again, one needs to qualify what one is saying by reminding the people asking the question that we are about to enter a period that is very politically complicated with China. In particular, if we have another Trump administration, it's the sort of thing that could make the enmity with Iran look like a cakewalk. So let's see how things go.
Last one on China. We've seen a lot of chat around revising strategic positions on China, whether it's concerns over tariffs and trade wars, new approaches to supply chains, even spiraling costs pre-pandemic. So do you think we're likely to see a change in those relationships globally when it comes to companies dealing with China? And also, how might this impact on the MENA region as that re-export centre that you were touching on earlier?
I think the last part of your question is easier to answer. I think the MENA region is going to be vulnerable to wherever things settle internationally with China, because the MENA region can't afford to upset its traditional backers and investors, and that is the Western countries. I mean, Mr. Trump likes to remind the Gulf states every time he can that without his military support, they would cease to exist. Pretty much, this is what he says, and so it's a delicate tightrope that the MENA region countries, some more than others, will have to walk at this time. Will a lot of things be revised, reconsidered, and revisited with China post-pandemic? I think so. I think that there is a rising chorus of anger against China due to the pandemic. And it's not just the United States. There are many European countries that don't seem to be terribly happy with the manner in which China has handled various aspects around the pandemic. And I think that we're entering a period that could get quite complicated in terms of international relations with China, and that will have its impact on economics inevitably. It's it's the most geopolitical of geopolitical stories emerging in the world today. It's more geopolitical than Iran, And the MENA region is smack in the middle of all of that, like a slice of cheese and a big sandwich.
Very interesting to see how things pan out.
And the sandwich is about to get hotter and hotter, microwaved or whatever. So we should see how that goes.
We've got time, I think, for 2 or 3 more questions. An interesting one here for us. Do you see the citizenship rules of the UAE changing? This is UAE specific, in the near future, looking for an older, potentially more affluent population rather than a younger, more temporary citizen?
I see residency rules changing. I don't know whether citizenship rules will change nor how. It's very difficult. That's for the UAE to study and determine. But I think that, people who've lived in the UAE for 20 years or 30 years and still have to go get, renew their residency every 2 years. I mean, these sorts of things are a reminder that one is a foreigner. I grew up in Saudi Arabia. I spent 16 years there, and we were expats the whole time. At the time, we couldn't own a house. At the time, there were many things we couldn't do. My father couldn't own a business that was majority his, for example, at the time. Things have changed a lot. They've come a long way in Saudi Arabia and in the rest of the Gulf. But in particular in the UAE, I think residency rules probably need to evolve.
The next question here is, we've seen credit insurers running for the hills, reducing limits and leaving suppliers and exporters with limited tools. What are your observations and recommendations about this?
Gosh, I mean, that's a whole lecture on its own.
It's a big question.
Yeah, it's an excellent question. It's not surprising, is it? I mean, it's not surprising that credit insurers have run for the hills. It's a tough time. This is where, when these are instances where governments and trade insurance type multilateral organizations come in, either to help credit insurers or to help banks or to help support reinsurers. But there's, this is a whole construction site that needs to be looked at very, very carefully, because this is a region built on trade, especially, as we said, exports, re-exports, all of that. Letters of credit are important to issue and to continue to issue in a way that's fluid and reliable and quick. So I can imagine that people are hurting, and this will require some careful studying by governments.
Nearly 10 years ago, with the Arab Spring and these changes to freedoms and liberties in the region, how much of a strain do you feel that lockdowns and restrictions have placed in that context? And should there be social, civil unrest concerns?
The social, civil unrest concerns that could emerge don't have to do with the lockdowns. They have to do with the fact that people could be losing their jobs. That's all. And that's why I showed those unemployment charts initially. And that's why I said that, unfortunately, the region has lost about 20 years and hasn't made a rapid enough impact on job creation, especially in the more populous countries of the region. So that is why governments have rushed in to help the private sector, keep people on their books, not fire them, etc. In some countries, they've even prevented them from firing them. So it's illegal to fire someone in some countries. In other countries, the government has said, don't fire them, we'll pay for their salaries on your behalf. Saudi Arabia has done that to a certain extent in some areas. But if people, we have seen social media action and actually physical demonstrations in some countries in the region. And people have said, we might not die of COVID-19, but we will die of hunger if you don't let us go out and work, if we lose our jobs. And that is a distinct risk.
Final question, I think, and it's quite a big one, quite an important one, so a good one to finish on. Places like the UAE, Qatar and Bahrain have become major financial centres, and you touched on tech earlier. Can we expect more digitisation initiatives from those governments, particularly when overcoming, I guess for a trade finance audience as we have at GTR, the lockdown restrictions when it comes to physical documentation, things like couriers? Do you expect greater digitisation drives in those financial centres? My
view on that is that if the governments do not go in that direction and rapidly, meaning if the regulatory frameworks of these governments don't evolve in a way to embrace higher digitization in the processing of various banking related documents, including, you know, KYC type work, more rapid digitization of all of that, then they would be hampering the growth of their own economies at a time like this. And they certainly don't want to hamper the growth of their own economies. They want their economies to continue to grow. Therefore, they need to help this growth by carefully studying the evolution of their regulatory regimes in order to adapt to the times, essentially.
Thank you. That brings today's webinars to a close, and many thanks to Florence for her time and to all of you who submitted your questions. We're sorry we weren't able to get around to addressing those from everyone, though I'm sure Florence and her team would welcome any follow-up if you wish to get in touch. Please listen out for further announcements regarding GTR webinars and other exciting new ventures, as well as, of course, our unrivaled editorial coverage at www.gtreview.com. But until then, take care and we'll see you next time.
Thanks, everyone. Great questions. Thank you.